Good morning. US equities fell. The greenback rallied the most since May last year, and precious metals slumped in their worst day since the 1980s after US President Donald Trump chose former US Federal Reserve Governor Kevin Warsh as the next chairman of the central bank. Long-term US Treasuries underperformed, and Bitcoin tumbled below $78,000 to the lowest level since April 2025 as part of a broader decline for commodities and digital assets. At the close of trade on Wall Street on Friday, the Dow Jones Index fell by 179 points or 0.4%, the S&P 500 Index dipped 30 points or 0.4%, and the tech-heavy Nasdaq Index shed 223 points or 0.9%. New York's main indexes closed lower as investors viewed US President Donald Trump's nomination of Warsh as a hawkish choice to succeed US Federal Reserve Chair Jerome Powell in May, while also digesting earnings reports, a high producer inflation reading, and rising geopolitical risks. On top of assessing the risks from US tensions with countries including Iran, investors were also worried about the prospect of another US government shutdown. The US Senate passed a spending package late on Friday aimed at averting a long shutdown as the White House continues to negotiate with Democrats on placing new limits on immigration raids that have provoked a national outcry. Several government agencies are still headed for at least a short lapse in funding, with House Speaker Mike Johnson not planning to hold a vote on the legislation until Monday. Meanwhile, Fed Chair-elect Kevin Warsh is expected to favour lower interest rates, but stop short of more aggressive monetary easing when he takes the reins from Powell. Traders regard Warsh as the toughest inflation fighter among all of the Fed chair candidates, raising expectations of a future monetary policy that would underpin the US dollar and weaken greenback price bullion. On Wall Street, the S&P 500 Materials Index led declines on Friday with a 1.9% loss. Miner Newmont dropped 11.5% for its worst day since October 2024 as gold prices plunged. Freeport-McMoRan was also among the biggest decliners, down 7.5% as copper prices slid over 4%. Bullion suffered its biggest slide in 4 decades, and silver posted a record intraday decline in a reversal of the rally that lifted prices to all-time highs. It was triggered by the US dollar rebounding after the Trump administration confirmed that it was nominating Kevin Warsh for the Fed chair. The greenbacks rally undercut sentiment among investors who had been piling into metals after the US president signalled a willingness to let the currency weaken. S&P 500 tech shares lost 1.3% on Friday, with the Philadelphia Semiconductor Index shedding 3.9%. KLA Corp led 15.2%. For its worst day since 2014 after its results, while Advanced Micro Devices slipped 6.1% after a negative report from SemiAnalysis suggested that its MI450 series AI accelerated chips might face delays. Defensive consumer staples rose 1.4%, with Colgate-Palmolive the biggest gainer, jumping 5.9%, its best day in almost 6 years, after the maker of toothpaste and soap forecast annual sales above expectations. Energy stocks gained 1%, with Chevron up 3.3% after its results, while ExxonMobil gained 0.6% after it reported fourth quarter adjusted earnings per share that beat average analyst estimates. Apple shares rose 0.5% after the iPhone maker beat market estimates for quarterly revenue, powered by its strong demand for its iPhones and a sharp rebound in China, with CEO Tim Cook telling Reuters in an interview that the demand for iPhone was simply staggering, with revenue growing 23% year over year to achieve its biggest quarter in history. The Dow Jones climbed 1.7% in the month of January to notch a 9th consecutive monthly advance, its longest winning streak since 2018. The S&P 500 gained 1.4% in its best month since October, while the tech-heavy Nasdaq Index was up 1% last month. US long-dated Treasury bond prices dipped on Friday after US President Trump said he would nominate Kevin Warsh to head the US central bank, a choice seen as bearish for bonds given his preference for a smaller Fed balance sheet. Warsh has previously called for regime change at the Fed, seeking, among other things, less quantitative easing, meaning he could push to reduce the amount of bonds it owns. Longer dated yields also moved higher after data showed US producer prices grew more than expected in December, suggesting businesses were passing on higher costs tied to import tariffs. The producer price index for final demand surged 0.5%. Economists had forecast it climbing 0.2% in the 12 months through December. The PPI increased 3% after rising by the same margin in November. US rate futures have priced in about 51 basis points of easing this year, or roughly 2 rate cuts. The US 10-year Treasury yield rose by 1 point to 4.24% and was up 7 points in January. The US 2-year Treasury yield fell 3 points to 3.52%, posting its biggest monthly increase since July, up 5 points. European share markets ended higher on Friday as investors digested corporate earnings and news that Trump nominated an ex-Federal Reserve policymaker to the central bank's top post. European banks gained 1.7% and led sectoral gains, with CaixaBank adding 6.7% after the Spanish lender said it expects lending income and profits to rise this year and next. The continent-wide FTSE Euro First 300 index lifted 0.8% and jumped 3.2% in January, its 7th consecutive monthly advance and its longest winning streak since 2021. In London, the UK FTSE 100 index was up 0.5% on Friday and 2.9% in the month of January, its longest monthly winning runs in around 12 years. Global oil prices eased on Friday as US President Trump reiterated openness to negotiations with Iran. The Brent crude price fell just 2 cents to $70.69 a barrel, and the US NYMEX crude price lost 0.3% to $65.21 a barrel. Brent gained 16.2% in January, the most since 2022. OPEC Plus ratified plans on Sunday to keep production steady for a third successive month in March. Gold futures settled 11.4% lower at $4,745.10 an ounce, its steepest daily fall since 1983, after US President Trump announced his choice for Fed chair, causing the greenback to spike higher. Silver futures slid 31.4% to settle at $78.53 per ounce, marking its worst day since March 1980. Copper futures shed 4.5%, also pressured by a stronger US dollar. Aluminium futures fell 3.3%. Iron ore futures slipped 0.1% to $105.62 a tonne on Friday, weighed down by China's growing port-side iron ore inventories ahead of the Lunar New Year. Australian shares are poised to open lower on Monday amid a cautious start to February ahead of the corporate earnings season and a local central bank policy meeting this week. According to the latest SPI futures, the ASX 200 index is expected to open the day down 60 points or 0.7%. Ahead of the RBA meeting on Tuesday, markets are pricing in a near 70% chance of a quarter-point hike in the 3.6% cash rate, following a hotter-than-expected inflation report and a surprise decline in unemployment. The S&P ASX 200 index logged a 1.8% gain for the month of January, its biggest since August, as metal and mining stocks gained 9.7% over the month on the back of soaring commodity prices. In Australia on Monday, the Melbourne Institute's January inflation report and job advertisement figures from ANZ and Indeed economists are both scheduled. Already released this morning, national home prices increased by 0.8% in January to a record median value of $912,465, bringing annual gains to 9.4% according to Cotality. Sydney advanced by only 0.2% in January and Melbourne added 0.1%, while Perth led with a jump of 2%, followed by hefty gains of 1.6% in Brisbane. Digital audio and video networking technology stock Audinate is scheduled to issue results as the February company reporting season kicks off. On the US economic front, the ISM Manufacturing Index and Chicago PMI are both scheduled. Walt Disney and Palantir are expected to release earnings. The US dollar gained on Friday as former US Federal Reserve Governor Kevin Warsh was selected to be the next Fed chair. The Aussie dollar dipped from 70.31 US cents to 69.41 US cents on Friday and was near 69.5 US cents an early trader on Monday morning. The Aussie gained more than 4% in January, its most robust monthly showing since 2022. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in. Have a great day and week ahead.